Well, hello there, all you market traders and profit takers. This is your Forex University professor at yourforexuniversity.com. We're going to take a look at some of the scalps here that we took on the 28th. We're also going to show you the ones that we didn't take and the reasons why we don't take them. This is all educational. This is for educational purposes so that you can learn how all of this stuff works. Okay, let's look at, this is the euro on the 28th, and we were looking at a short for the day on our signals. So what we did, well, first of all, as you can see here by this gray area here, this whole gray area from top to bottom, this is a barrier that we've got. And here's our GAN level. That's usually something we pay a lot of attention to. Okay, so what happened here, this is a trade, and this is the space, the void that we're looking at between here and here. That's our first void. This is where we opened up at over here, so we're kind of opening up right in the void. Okay, so we saw the price work its way up to the resistance area, and as far as scalping, now we had trades in on this at these levels around this blue line and the green line, and even in a red line here that we see here coming across on our QuickView for our day trading. But for scalping, what we're doing here is a little different. So once we hit a barrier in the scalp, now we're looking for things to come out of the area and back into the void. And there's the first close right here that closed below the area. That's our signal for us to start looking at things shorting again. So we start taking scalp trades. We could have taken a scalp trade at the beginning of this gray area around the 132.07, another one around 132.13, and another one around the 132.18 on, and put stops above these lines of resistance. That's how we would do that scalp. And then we're looking for a first target, possibly some of our depending on how your money management strategies work, would depend on which one of these trades that you got the entries on to take the first target from. Okay, I generally like to use the ones that has the most risk. Get them off the table and let them make a profit. So this would be your first target, which would have been filled really quickly. Well, not real quickly, a couple of hours maybe, because this is a 15-minute chart. But there's where the first fill would have taken place. Okay, and then you could have had another fill take place, depending on how many contracts. You could take another one off here, and you could have waited for that last one to be here, which of course would not have filled. Also, at this point, when you close below here, this is another void area, and it's not far-fetched to consider. Okay, so if you had waited for this close below this barrier and taken your short at that barrier and some others here around this marker here, set your stop would have had to be put above this high here, because you don't have enough barrier in place to cover you. Okay, so this would not have worked out for the day if you had waited that long, but it wouldn't have hurt you, especially if you've already had your trades in from here. Okay, now let's go to our next trade that was actually done in the day, which did not work out. Okay, this was the pound. We were looking for it to make a move to the long side. This is where we saw our void area was here, between here and here. We got the close above it and into that void area. We got filled for our first entry, filled for our second entry. Didn't get filled anymore. It looked like things were really going to go great. Now this trend line is off of a day chart. What we were looking for was 15 for our first spot to take a profit, which we never made it to. We almost made it there, right around here, but it didn't make it, and it turned out to be an expense for the day, because we were definitely, this was being stopped out. Okay, stopped out. Once we start seeing, originally we were looking way down here, which was a really steep area. Okay, then we moved it to this point here because of the swing low and breaking up again. So that was the new stop to minimize the loss, right? Because this was looking good. It didn't turn out so good. After all, got stopped out underneath the 165.79 after taking a trade long around the 95. That was a 16 pip expense on one, and another expense on the other one was around about 10. It doesn't happen. Everything is not etched in stone. Always remember, when you're trading, you will pay expenses from time to time. However, we were fortunate enough to make money on the euro, which balanced us out. So now the rest of these, such as this Aussie, they're just here for I'm just want to show you this for education. Here we had a void between here and here. We were looking for it to come down and touch this area, which it never did, so we never got a fill. That would have been the scalp, okay, to touch this area and work its way back to the top. So it didn't get filled, no big deal. We could have also, if we could have gotten a close above here, we might have tried that. If we had a nice little swing low and saw a nice little pattern of movement to the upside, that would have been great, to see that. But it didn't happen. On our next chart here, we're looking, this, you would think maybe this would be the void that you want between here and here, but it's not. If you look at the prices between 83.91 and 84.11, oh wait a minute, that is a 20 pip void. We, thank goodness we didn't take anything on here, because that would have been another expense on this Kiwi here, because here was a close above the area, got some support, started working its way up again, but crashed. So that would have been another expense if we were long. Let's go to the next one. Not really much of a setup here. A lot of stuff is spread out, and the Canadian dollar just kind of meandered around and around and around, never really went anywhere. Here's another one with very weak setup. Nothing really there. It's just spread out too evenly. No voids really to speak of. And again here, finally with the yen, once again, here was a void to take short between here and here. Never even touched. Got, we never got the close below. As far as going long, the void was between here and here. Small void, barely enough for criteria. Only reason why it would be even considered in the yen is because of the short range of the yen, because we generally like to see an 18 or 20 pip void minimum. That's the general standard. This one was only 16, but okay for the yen, because the yen's range was so small. So that was the 28th in terms of scalping. And again, these are educational. This is to try and get you to see how the flow with this. We're not trying to get you to do anything other than learn, and that's our objective here. And of course, learn as with using your QuickView as well, because if you are mastering that, you're definitely going to make a profit in the market. So let's keep learning, keep watching, keep using QuickView, keep making money. And I'm your Forex University professor at TheFXU-Professor.com, and wishing you all the best in your trading.